Hey, you're looking at a daily chart of the Nasdaq. Welcome to my weekly review. I just wanted to point out a couple things here with the Nasdaq. Obviously, it's had a great run, got a little overheated, and to me, I just draw these lines. I've been pointing this out here that it was bumping up against this upper trend line here, and it got back into its channel, which I like, I think is good, and it's just bounce back into the middle of that channel off the upper channel line. So anyway, just wanted to point that out. Another couple things I want to point out about the index is that it's up 34 or something percent this year, and we had a follow through day on January 6th and had this nice rally up till February 2nd. Then it retraced half of its move. Okay, it went up 16% and pulled back 8. But I wanted to point out one thing is that I was listening to a Twitter Spaces, and that the Silicon Valley Bank news came out on March 11th. This was not the cause for this sell-off. In fact, when that news came out, it bottomed that morning, which was, I think this was the 10th. Yeah, I think the news came out on the weekend, the 11th. And on the 13th, everybody was panicked, sold off, made a bottom there at 10,982. And what happened? It reversed higher and ramped to 12,200. And so my point is, you can listen to the news all you want. That's great. That's fine. But we want to see how the market reacts to the news. And this is a very positive reaction to the negative news. And then it went sideways for a bit. Then on May 10th, it made the new high above this old high here. On May 10th, went above 12,227, and it made a high of 12,337. That's when we stepped on the gas, and we've been on the gas ever since. I'm a little less bullish now just because of seasonality, but I do think the market's going to trend higher, and by Christmas we're going to have lots of Christmas presents, but there's going to be some volatility along the way. I just wanted to point that out. If you watch the news, just kind of watch it with one eye closed and both ears shut, because you just want to watch the market and how it responds to the news. And it responded positively to the Silicon Valley banking news, and the Fed acted appropriately and swiftly, and all is good. Anyway, that's it for the Nasdaq. I just wanted to point that out. Since it's a weekly review, I will point out that people say, no, it's too frothy, the market's gone up too much. Well, not really. I mean, enjoy the fruits of your labor here. As we're doing a lot of homework, we're doing a lot of work, and we suffered through this 37% drawdown and made a little bottom, and now we're enjoying the ride up. So don't celebrate your successes. Don't sit there and listen to the bears every time, like there's a recession, the market's crashing, those stocks are overvalued. It's a bunch of BS. Just watch the market, and it's going higher. I just showed you that trend line. That to me is going higher. So yeah, I'm going to get off my soapbox and get on another one, because I'm not happy with the rebalancing. I had to sell some Tesla and NVDA because I don't know. This is only the third time the index has done this. The Nasdaq 100 rebalanced. Just let the stock grow where they're going to grow. If they're going to fail, let them fail. This manipulation stinks. Apple, yeah, the big rebalance. The Nasdaq was down 2% on Thursday, and so Apple kind of follows. The index was down 1%, and then 0.5% Friday. But this rebalance just stinks to high heaven. Meta was down 4% while the index was down 2%. This could be part of the rebalance. I don't know. And that's why I sold majority of these stocks. I don't know what's going to happen in a rebalance with NVIDIA. It went down 3% on Thursday as the index went down 2%. Tesla had a bad response to earnings. I don't know if this is part of the rebalance, part of buy the rumor and sell the news. I don't know. So, when it's uncertain, I just get out. The index was down 2%. This was down almost 10% on Thursday and followed through on Friday. So like I say, when things get uncertain, I just, get out, and we can always reassess later. But this rebalance, let's just call it what it is. It's manipulation. Okay. Or maybe I should phrase it a different way. Do you think the rebalance is manipulation? In a Socratic way, right? What do you think? Let me see here. Microsoft is down 2%. They have earnings this week. This is a real big earnings for AI. related stocks and all of the stocks related to AI. I don't know how the market's going to respond. They're probably going to have pretty decent earnings. It's been selling off with heavy volume. The last 3 sessions pulled back to its 21. If you look at the weekly chart, it's had a nice run, made a new high, then pulled back. So we'll see. I mean, if it's anything like Tesla and Netflix, that was not good. To me, it's a red flag. There's negative responses to earnings. But let's get into earnings season a little further and see what's happening here with these high-flying large cap technology stocks. I'm going to go to something a little more pleasant here. That's SMCI. They raised guidance here from revenue 1.8 billion to 2.18 billion, and from earnings this quarter, just Q3, from $2.50, $2.65 to $3.25, $3.35. These are significant raises, more than 20%. I'm going to get to the weekly here because this is a high tide flag pattern, pretty rare, pretty powerful. It's a 15 billion market cap, stock. It's not a large cap stock like Tesla and NVIDIA, but you can see the flag, and I expect big move from that breakout of the flag there, which was 270. We had that buy point there at 270, and we'll just see what happens. I expect it to have a little trouble with this 300 number, and we'll see what happens. Maybe it'll go sideways around 300 for a little while, but it's a really strong stock. And they have earnings August 8th. They just raised guidance. We're going to hear about Q4. And somebody was questioning me about the revenue miss here, and that was because they were constricted by supply, and now that has been rectified, obviously, by the raised guidance. And so they're going to give us some color on the rest of the year, Q4. And, they're going to earn more than $12 next year, and that'll probably be raised. So this is not an expensive stock is my point. It's got about, 8 billion in sales, and, what did I say? A 15 billion market cap, 15.9. So it's less than 2 times sales. So not expensive, not like some of these other high flying stocks. So anyway, that's SMCI. I'm going to go through a few of the leading stocks I have on my mcstockcharts.com. This video is for my site, and for it's free to the public on YouTube. I post it there because the IT guys want me to. This is Builder First Source. Like I said, the index went down 2% on Thursday, and Builder was down 3.5%. That's normal. The index goes down 2%. Your growth stocks are going to go down 4, 6, or even more, and that's pretty normal. Right back here to its 10 EMA, nothing wrong with that. They have earnings August 2nd. Real strong stock. I call this a Kelly Slater stock. Just surfing its moving average. As you can see, the ascending base here. It looks like a base on base pattern, but it's an ascending base. Pretty rare too, like SMCI. That's a pretty rare base. ELF is another one of my leading stocks here. And ELF got hit by the Oddity IPO in last week. Oddity, took some of the love from ELF in the cosmetic sector. This, as you can see, it has not based since last year, and that concerns me a little bit. And this is another Kelly Slater stock, just surfing its moving averages, and pulled back to the 51 time, and it's just pulled back to the 21 last week. So any stock, that's surfing the 21 is perfect for a trend trader. It's just, where do I get in? And hopefully this bases. I want it to base, but as Mick Jagger's saying, you can't always get what you want. We're just going to watch that one. Celsius is another one of my leading stocks. Not happy with this performance, because when the market's ramping, you want your stocks to be leading that charge higher. And this stock has gone nowhere since May, the middle of May. May 18th, it was at 138.80, and right now it's at 143. So, $5 in more than 2 months, while the index has just been ramping. That is not good performance. But anytime a stock breaks out of a base and pulls back to its 50, that the probabilities are pretty strong. Our friend Mike Webster talks about that often. I'm not going to call it a gift, but let's just say in an uptrending market, when a stock breaks out of a base and pulls back to the 50, the first time, the probabilities are pretty good that it'll find support there. That's all I'm going to say on that one. Hubs is another one of my leading stocks here. You can see it broke out of a base after earnings, ramped higher, pulled back, and then ramped again, and just pulled back last week. Like I say, when the index is down 2%. This one went down 5%. That's totally normal. It's par for the course. And HubSpot, if you just look at the weekly, you can see this big sell-off. You can see the consolidation here, the stage one base, and now it's in stage two. It's ascending, climbing higher. And maybe it'll get back to old highs. Who knows? Maybe it'll be one of those 12% that sell off more than 40% and make new highs. Spot, they raised subscription prices last week. If you subscribe to Spot, you could see this one, you know, like a lot of the software names sold off. The old ski slope, the water slide at the water park consolidated here in a base, and now it's just another Kelly Slater stock. It's just surfing its moving averages. Like I said, growth stocks, you know, this one pulled back 4% as the index pulled back 2%. So that's just, you know, going to happen. 80% or more of the stocks follow the index. So that's, you know, the main reason why I cover the Nasdaq is, you know, because stocks follow the index for the most part. You can always find, you know, diamonds in the rough. This is Palo Alto Networks, another one of my leading stocks. This is a test book trade here for Palo Alto Networks. You can see the consolidation last year, essentially, and then the first part of this year kind of went sideways, then it broke out of this base. You can see it better on the daily here. The breakout, the move higher. This is a textbook trade, but what I mean is it breaks out of a base, runs up 20%, and then pulls back. Maybe it'll form another base, maybe it'll just consolidate, but that's the trade. For me, you know, the 190 to 250, take your money and run. Thank you very much. Good night, Irene. Anyway, MongoDB. This is a favorite of institutions. You can tell by the institutional footprint. This one ramped on earnings, just traded sideways. You know, as Webby says, this is a shelf. We've got to give credit where credit is due. He coined that phrase. And it's just trading along the 400 level. If you have MarketSmith and you look at all the data that it provides here, the up down volume 1.9, real strong. It's got the cash flow, return on equity, accumulation distribution rating, composite rating, blah, blah, blah. Anyway, you can see why MongoDB is one of the darlings and one of my favorite stocks. And since it was down 4.3%, while the index was down 2%, so twice the index was normal. Another stock I have to acknowledge, JP Morgan, the bank stocks are starting to ramp. And when you see bank stocks, trucking stocks, airline stocks strong, that tells us there's probably not going to be much of a recession that we've been hearing about for, seems like years and years from the economists. I think the COVID has kind of got them a little twisted because the market is strong, and we're going to have another interest rate hike this week, and you know the market can handle it, and it's widely expected. Anyway, JP Morgan, like I say, it's not the earnings, or it's not the news itself, it's the reaction, and this one had a very positive reaction. As you can see, large institutional footprints, they like JP Morgan. This is a 450 billion market cap. This is a big potato here, and you can see the consolidation, obviously the sell-off, the consolidation. Now it's in stage two, ascending mode. So yeah, I like JP Morgan. What can I say? Go Jamie Dimon. Some of the other small banks, you know, we talked about the Silicon Valley disruption there on March 11th. And then this one sold off. There's a small regional bank, PANW, and it's starting to percolate a little bit here out of this base. And so if you look at the weekly, you can see the massive sell-off, and now it's consolidating here at a little tight area. And now the last couple of weeks is starting to move up. So I just want to acknowledge some of the banks. I'm not going to go through all of them, but just the big banks and the little banks, they're making some noise. A couple stocks that I'm looking at for this week, setup wise, Allegro Microsystems. The only problem is earnings on Thursday, but I do like this setup. You know, broke out of this base and ran higher, and now consolidated, made another base here with a buy point around 48.72 area, pulled back to the 10. On Thursday, it was down nearly 5% as the index was down 2%, totally normal, par for the course. You know, be cautious ahead of earnings, but earnings could be a catalyst for this one, and that's why I am watching. Allegro Microsystems, Lululemon, another one. Had to take it off the list. You know, it sliced its 50 pretty hard here with volume, but then it rebounded, it ran right through it, and now it's, you know, at a buy point. But the earnings aren't due till August 31st, so I'm definitely watching Lululemon. And Chipotle Mexican Grill is another one, ramped on earnings, traded sideways. and pulled back to its 50 for the first time after the breakout. So that should be positive. We'll have to wait and see. They have earnings this week, so we're going to find out. I think it's probably going to be pretty good. We'll see how it responds, but that's why it's on the watch list, and hopefully we can get a power earnings gap again like we did last time. Crocs is another one, the world's greatest shoe company. This one sliced it's 50 on earnings last time. You could see it had a range of 136 to 116, quite the range. Sold off, made a bottom here, retested the bottom, and now it's kind of building the right side of the base. Pulled back to its 10 EMA on Thursday, down 6% as the the Nasdaq was down 2%. So that's totally normal. Earnings this Thursday. We'll see what management has to say there. Rivian is another one that I like. Had this flag pattern here, not a high tide flag. You guys got to stop it with the high tide flags. They're rare, okay? That means that not every stock is a high tide flag that goes up. Anyway, I like this flag pattern here, after the run up. So this one looks good to me. Big volume coming in. If we look at the weekly chart, you can see the last 4 weeks, massive volume coming in. So yeah, I know they had news, so it's positive response to positive news. So that's what you want to see. I did mention the truckers, ODFL is definitely one that's kind of still near a buy point here that I'm watching. And the reason why, the truckers, I'm watching this one because this one broke out already, SAIA. And so if this one broke out, I'm thinking that maybe the other ones will in the sector. But we can't be having a recession if these trucking stocks are this strong. ARCB, reminds me of my trucking friend, Mr. Paul out there trucking, keeping yourself safe out there on the America's roads. He's moving that steel. And anyway, this one is, to me, still got to go to the weekly. It's a weekly review. Sorry, I forget sometimes. But this one has a buy point there, 104.87. Had a nice move last week with volume. So that could be foreshadowing a bigger move here in the trucking space. Earnings this week on the 28th, which is what, Thursday or Friday? I think it's Friday. Yeah. Okay. And I mentioned the airline stocks. Delta, yeah, I had earnings and real strong earnings. The CEO was real bullish and about demand going forward. And these stocks are really strong. Typically, I do not even look at airline stocks, but you have to acknowledge, when stocks are coming out of a stage one base and showing strength. And this one is American Airlines. I showed you Delta, and United also is another one. And these things, all trade similar, and you can see it's just breaking out of a base here. And so I don't traffic in these stocks, air traffic control, but I'm just acknowledging that these stocks are doing well. Some of the mining stocks are doing well. Oil and gas, I'm not going to get into all of them. Tidewater is one of my favorites. And you can see it broke out of a base. But, I could get lost in the weeds with all these stocks. I'm not going to do that this week. I'm going to sign off now, except for in honor of the great Steve Jobs. One more thing. I must acknowledge my friends who made bank on Carvana. This is what Peter Lynch, if you read his book, One Up on Wall Street, talks about the turnaround stocks. And I see Carvana here where I live and in the Phoenix area. They seem like to be doing well. I see the trucks all over the place. But, a rumor was they were going out of business. The stock was tanking down to $6. And they had some good news last week. I know people were crying about it when it was traveling through 20. That it was overvalued and it's just short covering a meme stock. Well, I don't care if it's a meme stock. I don't care what it is. You can see this massive sell-off, the consolidation. Now it's ripping higher with volume. But anytime the stock's up 700%, you got to acknowledge it, say congratulations to the longs. It just filled this gap here last week. By the way, this is not my style. I didn't trade this. 44.64. Close that gap there, but I do know people who played it with options and made a killing, so congrats to them on the killing. Anyway, that's it for this week. Have a great week. I'll be back on Monday, and we never give up.